Hello everyone. Today I am going to provide you with an overview of MCX Natural Gas technical outlook for the period 29th of August to 3rd of September 22. And before starting this, we will take few minutes to review the last week outlook which we have shared as on 22nd of August. Natural gas as on 22nd of August ended at 742, and we have mentioned that the bias is ranged to up over and above 700 levels. As we can see here on the charts, natural gas is volatile but is trading within a parallel channel where it has made a kind of cluster resistances at around 760 775 odd levels. So this red line is a trending resistance line where natural gas has almost tested this resistance level 4 to 5 occasions since March 22. This is a daily chart, and as we can see here, earlier last week it made a kind of double top, or you can say a triple top on a monthly time frame at around 775 mark. But the best part was that this counter was forming a kind of higher lows pattern which indicates a positive bias. So we have mentioned that natural gas is at a crucial trend line resistance, but it holds positive bias over and above 700 levels, can target 860 level sustaining above 700 in weeks to come. So this was the outlook which we have shared last week, that the counter silver line will be at around 700 levels between bulls and bears. That means 700 was very important. Initially, if there is any kind of dip toward those levels, it can be looked for trading long with strict stop loss. While on the higher end, a move towards 850 and higher levels can be looked for contra trading shorts. So high volatility can be expected within this broad range. Now, if you see how things panned out, so last week we can see here on the charts, natural gas almost made the high of 8,000 mark, 800 mark before slipping down back to end the week at 744.40 levels. So it formed a kind of negative doji candle on the weekly charts from around resistance levels. And as we can see here, this blue line, this was earlier acting as a resistance. Natural gas attempted a breakout over and above that, but a selling pressure pulled the price back towards this blue line, and it ended up forming a kind of negative doji candle which indicates upside cap. So last week the low was at around 736, it ended at 744 odd levels, indicating that there will be a pressure at a high levels. So for the coming week, what we can conclude from this candle is that it's a negative doji candle. Natural gas silver line will be at around 800 and the support will be at around 680 levels. So pullback towards 800 mark can be looked for contra trading shorts, keeping strict stop losses. Until the time it is trading over and above 680 levels, still the bias remains range to positive. Only once it closes and sustains below 680, it can attempt to retest its immediate support of 600 levels. So as per this write-up, what we have mentioned is that for the coming week, the counter silver line will be at around 700 levels between bulls and bears. Initially, dip towards 700 and lower can be looked for contra trading longs, while pullback towards 800 and higher levels 850 can be looked for contra trading shorts with 6 stop losses. In respect with the derivative strategies, we have initiated the last natural gas strategy as on 24th of August, where we have sold natural gas 27th of September expiry at 744 levels, and we have also sold in the money put of 800 at around 110 rupees. So here the bias was that upside is capped, the downside can be there. So as we can see here on the expiry payoff diagram, the maximum result or the gains in this strategy will be below 800 mark. That means expiry at 800 and lower levels will give the maximum return of 66,875 per lot. On the higher end, the break even is at around 850 levels, where still the profit will be there at 4375 rupees. But over and above 850 expiry, this strategy will end up into losses. So the bias was range to down, and last week this strategy ended in a green, giving the returns of 5625 per lot. Apart from natural gas, we have also given the strategies in gold, in silver, in crude oil, as we can see here. And the previous natural gas strategy prior to 24th of August was as on 3rd of August. It was initiated at the level when natural gas was trading at 622 mark, and the bias was range to pull back, and the maximum profit was 66,000 per lot over and above 7,000 levels. So we booked this strategy as on expiry date of 24th of August, where we have generated the maximum profit out of this strategy, which was 66,000 odd levels per lot. So this strategy has given the maximum result as on the expiry last week, as on 24th of August. Thank you for your precious time. If you find our content and view relevant, then kindly get in touch with us at a given email ID and the contact details. It will be a pleasure to share our technical outlooks and the strategies for the coming weeks with you. Thank you very much for your time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.